Hi, welcome back to my channel. I'm Jill Upleger with Denver Real Estate at RE/MAX Alliance, and I'm here today with Michelle Beeson. She's part of Home Mortgage Alliance. So Michelle, tell me, how can buyers get a good rate and a good mortgage payment in today's market?
It's kind of the golden question, right? So there's a lot of different opportunities there, and it's always going to be a little bit dependent on a number of things, but one of the most common things is to buy down your interest rate. That has been not talked about for many, many years, and now we're talking about it every day.
All right.
And it's something that, with the way sellers are very motivated to provide concessions, and buyers are happy to take that and reduce their mortgage payment over time, right?
Okay.
We've got creative ideas like the 2-1 buy down, which we can talk about in a little bit more detail, but the 2-1 buy down has been a great opportunity for people to have a lower payment for a couple years to just transition into the longer payment, if you will.
Right.
Along with, there's things too that, depending on the situation, we can talk about credit. And the higher your credit is, the lower your interest rate is. So
Okay.
it's always going to be dependent on many things, but those are probably the three most common.
How much does it cost to buy down a rate?
So it's dependent on a couple things. The pricing of the day is very different. So I describe it as gross profit. So mortgage rate has pricing every day. So it's not just a 1% thing, but it's all based on the loan amount. So depending on how much they put down and their credit score is where the interest rate, originally comes from, and the property type. And so then it's kind of based on the pricing after that. Most of the time people talk about it in 1% of the loan amount, or 2, or however much. But again, very common thing right now. We talk about it a lot, and it's much more attractive.
Okay.
For the long
Can you
term.
give an example?
So, let's just say today's rate was 6 7/8 or 6.75, and your credit is 780. You might pay a point to have it reduced by a half a point.
Okay.
Maybe more. It's just, unfortunately, changes all the time.
And would somebody pay, I don't know, $1,000 or $5,000 for that point?
Well, so it is a percentage of the loan amount. So let's just say their loan amount was $500,000.
Okay.
They would pay then $5,000 for
Okay.
1 point.
Okay.
Yeah, and the points, so in origination, are not equivalent to 1 percentage point. So that can be confusing sometimes, where people think they're buying it down.
Okay.
But
So you talked about a 2-1. How does that work?
So the 2-1 buy down, your first year of your mortgage, it is 2% less. So again, let's just say the interest rate is 6.75. For the first year, it would be 4.75. And for the second year, it's 1% lower, which would be the 5.75. And then years 3 through 30, in a 30-year fixed, it would be the 6.75. So it's a fixed rate the entire time. It just allows that first couple years to have a lower rate to transition in. The savings of those first 2 years can be paid for by the seller or the buyer. So if the buyer, for example, just wanted to pay those first 2 years up front to then have their monthly payments less, that's an option.
Okay.
Seller concessions are the other option, right? It allows them to, again, have a lower rate those first 2 years. And what we're always doing is comparing the two. If you're getting a concession from the seller, what is the better opportunity for your situation? Is it the 2-1 buy down for the first couple years, or is it over the life of the loan?
So it almost sounds like an ARM, or adjustable rate mortgage, the 2-1 buy down. Is it similar, or are they even comparable?
So it's good to bring it up. They're very different, but ARMs are definitely a topic of conversation right now, because most people think they can get a lower interest rate with an ARM. Good or bad, it's not a good option right now.
Okay.
The secondary market doesn't necessarily want to have an ARM, because ARMs are adjustable. And so usually they're 5-year, 7-year, or 10-year ARM. And that means that it's fixed for 5 years, and then it's adjustable for the remainder of the loan.
Okay.
So that's not always the situation you want to be in. It just, again, it depends on everybody's situation, but it can be lower for a number of years, but then it has the opportunity to adjust up to 5% over what you're locked in at.
Okay.
So to me, and an ARM is a much more risky situation, right? Where the 2-1 buy down allows you to be fixed the entire time.
So your credit bureau, your score, can make a big difference. And do you help people with that as well?
We do. We have several resources that allow us to look at the credit report and kind of break it down and see what types of things would make their credit better quicker. So a lot of times people think they need to pay it off and wait months to get that all organized, and you really don't. We can navigate the system and the credit bureaus on their behalf, which is much easier than them having to call and do all that. But, you know, let's just say it's paying down a debt. It doesn't always have to be paying off a debt, but sometimes just paying off some of it allows the credit score to, you know, increase. And it'll give us the information on how much it will increase. So
Nice to know.
Yeah, and it also gives the buyers enough information to make a good decision where maybe we don't want to pay off that debt, because if it's really not going to get you that much better of an interest rate, maybe it's not worth that cost up front.
So obviously everybody has a different situation, and there's going to be a program or a tool or a product that might fit your situation more than somebody else's. So I'm going to put Michelle's information at the end of this video, and reach out to her or reach out to myself with any questions, and we will be glad to help you. If you found today's topic helpful, be sure to give it a thumbs up, comment, and subscribe to my channel so you'll get notifications every time I post a video, and you won't miss a thing. Also, if you're watching this on YouTube, make sure to check out some of my other videos showing on the screen. Thanks for watching.